Okay, welcome everybody. Good morning or good afternoon, depending on where you are. We're going to go ahead and get the show on the road. Looks like we're right on time. So thanks for joining us. And looks like we have a really nice crowd joining us here. People always tend to come on in. Uh, there's Daniel and Howard and James and Joel. There's Monica and so on and so forth. So with that said, a lot of people coming in right now to the room. And thanks for joining us. We're going to go ahead and get started. We're going to talk about automated options trading. We have a secret strategy we're going to tell you all about and how we can make your life a lot easier. At least we think it's a lot easier. So remember, let's get the preliminaries out of the way. We are speculating. We're trying to make money as prices move up and down, but there's always risk involved. So let's talk about the risk disclosure for one moment. Do take a look at that, and it is important to read. I'll give you just a moment. Keep in mind that all funds committed should be risk capital and that past performance is no guarantee of future results. Okay. We're going to talk about algo-generated options trading, pre-built option spreads, one-touch trade alerts, automated risk and profit controls, bull, bear, and non-directional markets. This is going to be something new, I think, for probably almost all of you. We don't want to try to fight the tape. That's an old ticker tape machine there. We want to trade the environment that the market is offering us. So we have strategies for all different scenarios. So we're going to show you what to do here. And if you like it, we'll show you how to get involved and take action. First of all, a little bit about our background. That's yours truly there. Some of my colleagues down on the trading floor, S&P 500 options pit. We are a registered introducing brokerage firm since 1999. And of course, we're all licensed with multiple decades of experience. You might have seen us in some of these other outlets and vendors and whatnot. We sometimes get quoted in different publications. This is just a few weeks ago here with gold, talking about the gold market, so on and so forth. So we do have quite a footprint. We are regulated, of course, with the NFA and CFTC. We're located in California. Some of the vendors that we associate with. And we are futures and options experts. We've been doing this for a long time, trading millions and millions of contracts along the way. So with that said, you don't want to try to figure everything out by yourself. That's what we're here for. So we have trading solutions built with decades of experience and input from industry veterans, and that's what we're going to dig into in this live demo and presentation. In just a moment, we'll get into the demo. And just a bit about myself, I'm Eric Gebhardt. I'm doing this about 30 years now. I have my BS in Business Administration from the University of Southern California. And it's been, like I said, quite a while now, almost 30 years. And I'm a co-founder of AltaVest. I've done some presentations, many presentations over the years, just a sample. Maybe you've seen some of them, maybe not, that's okay. And with that said, just a little bit about my background. I took an investments course in my business school there, and we were trading options and futures, and I should say training or learning about them at the time. That's my textbook. And we were looking at the oil fields burning up in Kuwait and the oil market doubling in value, gold prices jumping. So that's the background in which I learned about the commodities markets. And I had my securities license for a bit after graduation, but I did get involved. There's one of my first jobs there, a blast from the past, with trading futures and options, and I've been there since. So with that said, the preliminaries are out of the way. We're going to jump into the presentation, and I'll go ahead and shut off the webcam right now. You know I'm here, I'm real, and we're going to sign off for now, give you more space on the screen. Okay, very good. 3 common barriers. How many of us can relate to these? Everyone's a day trader now. That's all we hear about. But look at this, GameStop, pretty crazy stuff. It's difficult, folks. Here's a group of people that train people to day trade. They say there's a 3.5 to 4.5% success rate. Here's another article from the Journal of Financial Markets. It says here that Less than 1% of the day trading population can predictably and reliably earn positive abnormal returns. So it's not that easy. If some of you are doing it, more power to you. It's not to say we can't trade stocks ever, but it's difficult to do, and I don't think you probably want to end up like this person here, stuck in front of a screen, babysitting trades all day. Precision. This kind of is self-evident, but we sort of lose track of it. If you're going to be trading stocks, let's just use that asset class, for example, you pretty much need to be perfect with all of these elements here. Pick the market, the direction, apply the strategy at the right time, and get out at the right time. So a lot has to go correct to successfully trade stocks. And 3, here's the other hurdle, your emotions. I like that little GIF there. Control your emotions. Ed Sequoia, he's a system trading pioneer. He says it can be expensive trying to convince the markets that you are correct. And I think we can relate to that. This always gives me a chuckle. So we all feel like this at times. I get it. We all have emotions when we're trading, but that can be our own worst enemy. Hope, fear, greed, boredom, frustration, you name it, anxiety. But really, we have bad wiring, so we have a built-in bias to make poor investment decisions. We tend to chase past performance. And what Mark Lindheim is saying is that we sell the lows and we buy the highs far too often. Just the way we are wired. And it says our brain is killing our returns. And I think that's a pretty succinct way to put it. Motley Fool says our worst financial enemy is us. And there are 3 common biases when we're trading or investing. There's confirmation, there's anchoring, and there is recency bias. We won't go into all that, but this little cartoon kind of sums up probably all those elements to some degree. This guy here says his stocks are doing great. What else do I need to know? He's got blinders on, and of course he can't see all of the mayhem and chaos and headlines around him. So here's the 3rd part of the presentation. Algorithms have no emotion and they are dominating the landscape. Machines are causing sharp drops and rallies. Large institutional firms commanding 80% of the US stock market activity. And then this is from MarketWatch. Algos sped up the selling, leading to the fastest bear market in stock market history. So that was about, well, just 1 year ago, right? Bloomberg robot analysts can outwit humans on their investment picks, according to a recent study. So that's what you call revolutionary trading. So this is what it used to look like. Here's a grainy old video from, well, not too long ago. I took this visiting the trading floor. And things changed very quickly, folks. It doesn't look like that anymore. This is what the trading looks like. No emotion, they run automatically, built-in risk and reward controls. So how can you use this technology to trade options and compete in this landscape? That's what we're going to talk about, automated options trading. And for lack of a better word, I use the word weird. It's a bit of a weird strategy for automated trading, but you need to know about it. So let's jump in. Here's a secret strategy for up, down, and even non-directional trading. We're trading stock index markets, and we'll show you why in just a second. Here's why. They're less volatile. So as you know, an index might move 3% in a day, and that's a big move in one day for a broad index. But individual stocks can move 10%, 20%, 50% in a day. And we have a secret strategy that only works with the indexes. And also, why not just track 1 or 2 or 3 markets and not thousands of different securities? So there's some big advantages to trading just an index. Here, look at Tesla. Not too long ago, we were at 400, went to 850, dropped down to 650. How do you really trade that? Look at GameStop, drops by 40% in 25 minutes. That's what it looks like on the graph there. So just a couple examples. I don't need to belabor that, but you get the idea. Now, looking at insurance companies, how do they make money, folks? Well, you understand that because you pay them premiums. The insurance company is essentially selling time. That's what they're doing. They're selling time. But they do insure themselves against against risk, which they know will happen at some point. But they're patient and they use probabilities and math. They use statistics, actuarial tables, you name it, expected returns, on and on and on. Simply, they're using math, just like a casino does. On that roulette wheel, if you bet on that green 100 times, $100, you spin it 38 times, you're going to lose $5.26 on average per spin. And that's the house edge. It's just math, folks. So the casino wants you to sit there for a long, long time because over time, they're going to take money from you. And they do that even though they'll lose at times. So here's something else too. Stock trading, is it really gambling? Here's an article, Market Watch. The New York Stock Exchange president says stock market is not a casino. However, academic research says 3.5 times more gambling in stock markets compared to traditional venues like casinos and lotteries. Thought that was interesting. And it says here the US and Hong Kong have the highest per capita levels of what they call stock market gambling in the world. So we're going to try to stop gambling, folks. That's my chicken scratch on the screen. We're going to try to look at higher probability outcomes, base hits as we call them, for looking at a baseball analogy. Some of you might have heard of a baseball player retired now, Rod Carew. He would win batting championships and he would hit no home runs. So really that's the whole point of me mentioning this baseball analogy. He was an excellent player. He would win all sorts of batting championships, but he rarely, if ever, hit home runs. So that's what we're going to try to apply that same sort of outlook to trading options with higher probability outcomes, looking for base hits by selling options and collecting the premium that the buyers are paying. Let's be consistent and patient. We have to manage risk. We know that we will have losing trades. And manage reward, not get greedy, but you need the proper tools to do this. No, there's no pun intended when I say there's a lot of options when you're trading options, and if you don't have the proper tools, it can be a very consuming, really nightmare. So many base hits, not swinging for the fences, short option strategies, non-directional, bullish and bearish. We're looking at higher probability outcomes, and these trades all have predetermined risk. These are called credit spreads, where you collect premiums. Every position is insured or hedged. Once again, predetermined risk and reward, and they can be bullish, bearish, or even neutral or non-directional. Advantages of credit spreads. There's a wide margin of error on your trades, and I'll show you why. But don't worry about this graph, but you can just see here the S&P 500, for example, trading sideways. Here's some calls above the market and puts below the market, and I'll explain that in just a second. And if this piques your curiosity, that's good, because we're going to talk about it in 5 minutes. But first, let's lay the foundation here. We're going to look at probabilities. And one of those, when it comes to options trading, it's called delta. And it's really the approximate probability of expiring in the money. So if an option has a delta of 0.25, that means there's a 25% chance it expires in the money and a 75% chance of expiring worthless. And delta is always moving with price and time, so it's not static. And it is not the probability of a winning trade. So if there's a delta of 0.25, that doesn't mean there's a 75% chance you'll win on that trade if you sell that option. There's also one other we're going to look at that's called theta. That's sensitivity to time. It really equals time decay. Every option has limited life. So you refer to time as theta as a negative number equaling 1 day of time decay. So if there is a premium at 10 and then theta is negative 0.05, the next day the premium slips to 9.95, and after that 9.90, and so on and so forth. Here's what that looks like on a graph. As you approach time 0, the percent of the premium starts to fall off dramatically. Here's an example of selling a call spread. And if you've seen this, we'll go quickly. If you haven't, we'll make it really easy. Here's the S&P 500 trading away, and you decide to sell a 35-30 call above the market. And when you do that, you collect 4.5 points. But simultaneously, you buy the higher strike 35-30 call. You pay 2.25. So the net result is you collect 2.25 points, $112.50. So you collect that money, put it in your pocket, and that's how that works with selling a call spread or perhaps selling a put spread. $29.90 put, you sell for 3, you buy the $29.70 for 1. So the net result is you collect 2 points, $100 in this case, and that's how that works. Of course, there's commissions too. You have to keep that in mind. But remember, these are not naked options. These are always insured positions when you're selling covered spreads. That means your maximum risk is capped in advance. That's what's called a covered option spread. Do not trade naked options like this poor little mouse and cat. So only covered options. And here's another benefit, folks. No margin calls. If you're trading naked options, it's going to work great until it doesn't. And you're going to probably give back everything and more when it stops to work. So at the same time, you're trading covered options. There are no margin calls. And when you have margin calls, you end up with the market trading you. And that's a really bad place to be in. You're going to have to be forced out of positions or add more money. So the way we do it, there are no margin calls. Let's look at an Iron Condor. It's a non-directional strategy, and it's just a combination of that put and call spread we looked at. Here's a graph, simple graph, sell an out of the money call spread, sell an out of the money put spread, and collect the net premium. Now here's the secret strategy, that weird strategy we talked about. We'll spend a moment on this. We call it the Dragonfly, something we created years ago. It has 6 legs or 6 different options. It's a non-directional variation on a condor. Now here's what it looks like. We'll walk you through this. We'll focus on the calls up here for now. We're going to sell 4 of the 3780 calls, the red line. We're going to buy 3 further out and 1 closer to the money call. The one that you're buying that's closer to the money, it's 50 points closer to the money. So it completely changes the risk-reward dynamic of this trade. You own this call. So it is going to gain in value more quickly if the market moves higher, and it's going to lose value more slowly. In other words, theta decay won't impact it as much. Once again, it's 50 points closer to the money. And the same thing with the puts, same structure on the bottom, the 4-3-1 structure. And in this case, the put that you buy is additional insurance. It's 50 points closer to the money compared to the 4 that you sold. And of course, this difference here of 50 points doesn't always have to be 50 points. That's what we're going to show you in just a second as well. But that gives you the structure of the Dragonfly. So you're collecting premium, net premium on calls, and net premium on the puts. But you buy this additional, let's call it the insurance call and insurance put. So here's another secret variation. You can just do the call side or the put side of a Dragonfly, for example. And then how about this? We call this, well, we gave it a unique name. We call it a Bear Hedge. So quite simply, you sell an out of the money call spread and you use that money that you collect to buy an out of the money put spread. So then if the market starts to drop quickly enough, the put spread that you own will gain in value and the call spread you sold will lose value and the whole trade will become profitable. So that's how that works. You could do it with a bull hedge as well. Same type of thing. I won't spend a lot of time on that right now, but here's the question that people have, and this is what they look like after seeing this sometimes, scratching their head. I think that's Jackie Chan, right? Which options trades do you make? How do you know which market to buy and sell, what strategy to use, at what price, what's your entry timing? How do you manage the risk and the profits? Here's your answer, folks. That's Theta Trader. A couple of our floor traders there, by the way. I think that's a neat picture. Pre-built option spreads. Our proprietary algorithm will create what we have named Theta trades. These are advanced strategies with automation, bull, bear, and even flat markets. Then you have automated risk and profit tracking, something called the Risk Thermal Indicator, or RTI. It's a color-coded automation. Simple and effective trade selection and trade management. So now it's time to jump into our demo. Okay, folks, you are now viewing the dashboard for Theta Trader. And I'll walk you through this here. So this is what you would see when logging into Theta Trader. You'll see Theta trades in this section here. You'll see your open sold or short positions here, open bought positions, and then any current quotes, and then your account info. That's pulled directly from your AltaVest trading account. All this is integrated with your AltaVest trading account. And let's start at the top here. You'll see there are bullish strategies that are pre-built, bearish and neutral or non-directional. And we're looking at the E-mini S&P 500, NASDAQ 100, and Russell 2000. But primarily, most of the volume is probably on the ES. But there are some trades occasionally on the NQ and the RT. And we'll go ahead, since we looked at the Condor and Dragonfly, that's where we're going to spend a little time. So you'll notice the condors are already built for you. The algorithm has decided on trades that have anywhere from 17 days till expiration down to 62 days till expiration. And you'll see all the different expirations listed here. And all the strike prices are pre-selected. And you'll see your profit potential at expiration, and this is your targeted annualized return at expiration. And use this number to compare one trade to another. You cannot expect realistically to generate these types of yearly returns. That's not what that number means. Simply there to compare one trade to another. And we'll look at the May end of month expiration. Let's drill down. And the first thing I like to do is look at a graph. That gives us perspective here. You'll notice the call spread you're selling out of the money here, and the put spread out of the money. And that's what it looks like on the graph. And let's walk through some of these headings here, these titles here. So you'll see the market, days till expiration, your expiration date, settlement value, and the net premium, your put risk, call risk, commission, available capital, cash required, profit potential, targeted return on cash, and then your targeted annualized return. So let me slow down just a second. So what happens here is Theta Trader will calculate the cash required based on the maximum risk within the puts. So in this case, your put risk is $1,000. So your cash required is the $1,000 minus the premium received. Now, here's the question we get. If you have to put up $913.50, but your maximum potential is $86.50, that seems like an asymmetrical outcome that would be working against you. But let me point out here, this is the key. We talked about delta. The put that you are selling, the 3460 put, has a delta of 10%. So that means there's a 90% probability this option is going to expire out of the money. And then the call that's being sold has a 6.8% delta. So that's over a 93% probability that this option will expire out of the money. So these are the higher probability outcomes that we're looking for. And you'll notice the targeted return on cash, your targeted annualized return. And when I show you the Dragonfly, we'll keep in mind, we'll compare the Condor to the Dragonfly in just a second. But you'll notice it's pre-populated here, pre-selected to sell. You're selling the Condor and collecting the premium. It always defaults to a quantity of 1. Let me just bump that up to say 5. You notice your cash required changes and all the numbers change as well. And we'll go ahead and place that order. So here it is, selling those 5 condors. It just assumes you're filled. This is just a demo account. Now there is a trade simulator, and I loaded several simulations, and I didn't go through all of them, but we can go through some of them. It'll save us time by having these preloaded. But right here, there's a trade simulator where you can do some back testing. I want to point that out so you have an idea what all those tabs are. But I also want to point out before we do that, the Dragonfly. So let's just look at a Dragonfly example, and then we'll look at some trade simulations and kind of go backwards in time. Here is the May end of month Dragonfly. Here's what it looks like on the graph. Again, you're selling the red line are the calls you're selling and the puts you're selling, and the blue are the ones that you're buying. Now you'll notice that the cash required on a Dragonfly is higher, and that's because you're selling 4 calls and 4 puts. So it's always going to be in a quantity of 4. This structure here, 4, 1, 3. And you'll notice your targeted return on cash is a little bit lower compared to a Condor. And again, that's because you pay money to buy this call and this put. So you're hedging yourself, and you're making this trade a little bit more risk averse by paying money for that additional insurance. And you'll see the puts that you're selling have a 10% delta, and the calls you're selling have a 6.8% delta. So again, the higher probability outcome that you're looking for on the Dragonfly. And it always defaults to a quantity of 1. Maybe we'll do 2 of these. You're selling at a price of just over 8 points, trying to collect that money, and you'll go ahead and place that trade. So you can see we just did the Dragonfly and we just did the Condor, and that's what we've just done here in the demo. Okay, so going back to the dashboard, let me look at a few simulations here. Let me scrunch this down. You can see the full screen. So if you want to do simulations, you just simply go up to the trading section and go to the simulator. But I've preloaded a few here. So here's a Condor, and you can use these buttons to go backward and forward in time. And let's look at this. So what we're doing here is, imagine you had placed this Theta trade Condor on January 4. And each day that goes by, you see that losing a little bit of money when you first start, which is normal, but then it starts to turn green and profitable because of theta decay. And you can see the days till expiration is ticking down here. Oh, let me do this. Sorry, folks. Now, look at this. It turned blue. So blue means take profits. That's what that color means on the RTI. Green means do nothing, and blue means take profits. And you can automate this. I'll repeat, you can automate this so that Theta Trader tracks it for you, and then when your trade turns blue, the order will automatically be submitted. And I'll show you how to do that in just a moment. But you can see here on February 5, with 15 days remaining, the algorithm decided there's not enough juice left in the trade, so to speak. The juice isn't worth the squeeze, as they say, or there's not enough meat on the bone. So it says, get out, take your money, and go to the next trade. So that was a week 3 February Condor. So here's a week 3 February Dragonfly. Let's see if there's a difference in how these trades react. Look at this. It turned profitable on January 22. So get out of the trade, take your money, and run on January 22. And you compare it to the Condor, you had to wait till February 5. So you'll notice here on January 22, the condor was profitable, but not enough for Theta Trader and the algorithm to generate a profit-taking order. So that's a key benefit compared to the condor. The Dragonfly often will allow you to close out a trade much earlier and get out of that position and move on and take your money and go to the next trade. It just matures quickly. Here's another one. So this one matured here on March 3 with 29 days left. And now here's a Dragonfly on the same day. And that matured on the same day as well. So no difference there. So those trades would have worked out equally. That's okay. And let's take a look at January 13 of last year. Here's a condor. And that one worked out on August 19. So let's do a Dragonfly instead. Compare it to the condor. Look at that. July 28, you were able to get rid of that trade very, very quickly. Almost like, what is that, 2 weeks after you placed the trade. So it matured much more rapidly. So you're able to close that one out on July 28 compared to August 19 with the condor. And we can look at a couple others. It's kind of fun to watch these play through, although you can skip to the end. You don't have to do this. Now it turns yellow. That means a slightly elevated risk, but do nothing. Then it turns orange, which is more elevated, and then it turns red. So this trade is a loser on February 28. Now, once again, you can automate this. If it turns red, too much risk, and you can automate that, and I'll show you how to do it. So Theta Trader will track and monitor your positions and automate that for you. So that was on February 28. Or let's check out the Dragonfly. Elevated risk, turning yellow, but don't do anything. And look at this. On February 21st, you had an opportunity to take profits. So the Dragonfly matured and took profits, giving you a chance to close it out, but the condor never did. And we'll look at maybe one more here, two more. Here's another condor, June into month expiration. Elevated risk. And then it turns blue with 7 days remaining. And we'll look at a Dragonfly. That's the same, that's the same date. So we're just comparing condors to Dragonflies placed on the same day. And look at this. This turned profitable on May 28, much, much earlier, almost with over a month of time remaining before expiration. So you compare it to the condor, that was June 24 was the first time it turned profitable. And then we'll look at one more here, and then we'll move on. Slightly elevated risk, you can see why. It's getting closer to that upper short call that you've sold. And then it turns red, you take a loss on January 16. Or if you'd done a Dragonfly on that same day instead of a condor, look at that. The trade actually is profitable on January 3rd. So also one other thing here I forgot to make note of is we always highly recommend closing out trades before they expire. Theta Trader will never hold on to your trade until expiration. If you set up the automated trade exit, You're either going to be out when it turns blue or you're going to be out when it turns red. So one way or another, you're going to be out before expiration. So that's a key element there as well. And we'll go back to the dashboard and also just point out here, you can use these controls. You don't have to use the play button. You can just go right to the end and get your result like that. So you can have a lot of fun actually with this trade simulator, sort of like an options trading, spread trading time machine. Now here's what you would do if you want to look at all your open positions. You've placed a bunch of trades, you want to see how they're doing. First of all, you can see right on the home page, right here at a glance. These are your short positions or any bought positions, because you can also buy option spreads, but those are lower probability outcomes. But also, you go to your open positions page. And here you can see all the open positions in this demo account. There are 9 short positions, your open profit and loss. There's 1 long or bought position. The buy is always blue. The sells are always red. RTI, the green for everything, so do nothing. And if you want to look at any details on any one of the positions here, just click on this Dragonfly. And you'll see here what it looks like on the graph. You can see this trade placed on March 17, and so far so good, nothing to do, it's all green. So it's pretty simple stuff. And here's your closed positions. You can filter any way you want or just look at everything, but there's 20 on this page, 18 winners, 2 losers, your total profit and loss. Short positions, 16 winners, 0 losers. Bought positions, there are 4, 2 winners and 2 losers. This is just a demo account, folks. I wouldn't make too much of the results. This is really to illustrate how simple it is to look at your history and your open positions. And for example, here's a condor trade. You scroll down and see the whole history of the trade. So this was placed here on January 21st. Slightly elevated risk here for 1 day, but still do nothing. And then it matured or ripened enough here with 11 days remaining, and Theta Trader took profits. So I compared the Dragonfly and the Condor because we really, really like to focus a lot on the Dragonfly, but that's not to say you can't ever do a Condor. Condors will have a little bit higher reward, but the Dragonflies tend to be a more robust strategy at certain times in particular. And you give up a little bit of profit potential, but perhaps you can close trades earlier, or perhaps a trade that loses money on a Condor does not on a Dragonfly. Let me point out a couple things here, and I'm going to move along. You can also do bullish strategies. Remember we talked about the Bull Hedge, for example, or the Bear Hedge. So here's what that looks like. You're buying an out-of-the-money call spread and selling an out-of-the-money put spread to pay for it. So you can just as easily do that. We'll just do 3 of these. So you can see the call spread there and the put spread there. So just want to point out, you can do directional strategies, and we will do those at times. We absolutely do them. And you can also do this on the NASDAQ or the Russell 2000, like I pointed out. And there's bearish strategies here as well. You can simply do, well, here's half of a Dragonfly, just selling the call side of a Dragonfly, collecting the premium. So you can do all these strategies. They're all pre-populated. And let me show you here. This is how you automate everything. Here's the key, folks. So simple. You go to My Account, go to your settings, and you simply check this box here. Activate your risk manager and activate the profit directive. And that's all you do, and then save those settings. And that from that point forward, Theta Trader is going to track and monitor your positions in your account, and it's going to then submit those orders for you whenever they turn blue for a profit or red for a risk. Also point out we do daily research. This is proprietary to AltaVest and Theta Trader that can help inform your trading decisions here with technical analysis. We also do a daily trading summary and narrative on what happened in China, or not as much, not well, often China, but let's say Asia, as well as Europe and the US markets. And that's all part of the Theta Trader package. And here's a great help file, by the way, all this here. And there's a great segment here on the RTI. You can read about how that works and what the colors mean. There's more definitions here on all the strategies and the spreads. So we give you all that information. We also have tutorials here. These are videos. If you want to walk through some of these, they're short 2-minute, 3-minute videos, and also education, a little background on futures trading, futures options, some of the advanced strategies and spreads that we talked about. So it's all available here within the Theta Trader package. All right, that is a great overview of the actual platform, but I want to show you the very best feature of all. So bear with me here as I switch gears. Yeah, and feel free to keep questions coming. I think we'll probably answer them as we go along. And at the end, I have FAQs. But I see some questions coming in, and that's fine if I don't get to them this very second. I should be able to get to them towards the end. Okay, here's the best feature of all, folks. It can be even easier. Trade alerts. These are quite literally 1-minute trade alerts. One touch response is all that's needed. And you simply touch accept or reject, and that's all you have to do. Most alerts, or every alert that I know of, I've never seen alerts like this. You receive an email and you have to copy in something to some other platform and log in somewhere else, or you receive a text, you have to copy it from one place to another. These alerts are live, meaning they're integrated with your AltaVest trading account. So you simply touch accept to place the order, or touch reject if you don't want it. So here is how it works. There's a short little video. You receive that text with a hyperlink. You touch the hyperlink, and this is what happens. So you see, you'll get a description of the trade. You get a graph of the trade. Your account number, the premium you're collecting, how much cash is required, the quantity. See, it sells 10. The quantity is already pre-selected for your account. It's already pre-sized. The pricing is already done. You see the days to expiration, your TAR. Obviously, this is from a video here that probably last year, I guess. S&P is obviously closer to 4,000 now, but nonetheless, it all works the same way still. And that's simple. Here, I'll let you watch it one more time. Okay, that is great stuff. And people absolutely love those alerts. I can't tell you how many people rely on them. A lot of great feedback on the alerts. So we have seen the demo and the alerts, and we're going to get into some FAQs and kind of wrap it up. So we're going to show you how to get involved if you're ready to take action. We have an amazing offer for you. This is what you need to get started. Called the Theta Trader Elite membership. Of course, that includes the Theta Trader software. Everything you've just seen, our proprietary algorithm, creates those option spreads, simple and effective trade selection and management. How about tracking your trades looking at a page like this compared to this? So cannot be done with a typical brokerage statement. That much is for sure. How about the RTI? Automatically exit your trades based on the blue profit-taking signal or the red risk signal. So that's really autopilot. That's about as non-emotional as you can get when you're trading option spreads. You just check that box for the risk and the profit directive. And then, of course, the trade simulator, you saw how that works with the back testing with those animated charts. That is worth a fortune, folks, having that ability to backtest option spreads. That's just not something you see. So you have the Theta trades, the RTI, and the simulator. That software valued at over $3,500. Now here's the, I guess you could say the cherry on top, but I think it's probably the actual meat and heart of the matter, really, that trade alert setup. So one-touch trading. All this is integrated with your account. You simply accept or reject. The trades are all individual for you and your account and at the right size. And the alerts are integrated with your account. You just touch accept, and everything is handled via our technology. And then, of course, once the trade is placed and filled, then the RTI will automatically track and monitor and then submit orders when it reaches a blue or red signal. That alert service is really invaluable. I know people are spending a fortune on services. That's valued over $4,400. So with your Theta Trader Elite, you have the Theta Trader software and the alerts valued at over $8,500. But this is what really kind of brings the Elite membership under one umbrella, kind of pulls it all together. Your private coach. You'll have 1 hour screen sharing sessions. For example, choosing your trades, using the RTI, using trade alerts, more advanced strategies. You'll have a co-pilot to work alongside you. These are all licensed professionals. Discuss your history, review your trade history, whatever you want to talk about. Invaluable. We assign a value of $7,500, and that is being very conservative. I know people spend $25,000 and more on trading education when it comes to options, but what we're saying is we provide you what you need with Theta Trader and your Elite membership. So you have the software, the trade alerts, your private coach, valued over $15,000. And let's not forget, we talked about our proprietary research that'll help inform you along the way. So that's all included, as well as those tutorials I mentioned. So over $18,000 value with the Theta Trader Elite membership. We think it can be the one thing that is worth it for you because it's going to work, save you time. You can cancel subscriptions, lower your stress and aggravation levels. We hear that a lot. Makes it very user-friendly. So we think the answer is yes. And this sounds a little corny, but it's true. Others have paid tens of thousands for options trading software and alerts, and we hear about it. I know of people spending tens and tens of thousands of dollars on different services and software platforms. So we're there, we understand, we hear you, but here's the deal with Theta Trader, our special offer. It's a live webinar. So the Elite membership, something we typically in the past have offered at over $2,000 when we did live presentations not too long ago. But we're going to bring it to you at a much, much steeper discount than that. Here's that Elite lifetime membership, one payment only, $597. And there is the link to get started, cf.altivest.com/TT. There is our phone number as well. And remember, this is lifetime and it's one payment. It's just one payment for the membership and you have no excuse because it's guaranteed. If you decide against it in the next month, let us know. We'll refund that membership. I mean, no one's twisting your arm. We've been doing this since 1997. So if it's not a fit for you, it's not going to work, and that's okay. But you really have no excuse because you do have that guaranteed guarantee policy on your payment there. So a few FAQs. Do you trade stock options? Well, nope. We just talked about we're only doing the ES primarily here. And you saw why, because of various reasons. I'll get into that a little bit more here. How about tax efficiency? You can lower your tax rate by over 10%. What we're doing are basically tax advantaged trading with these, what they call IRS Section 1256. So what it means is 60% of your gains are taxed at the long-term rate, which is always going to be less than your personal rate. Well, probably less. So here's an example. If you're trading stock options, you make 20% on 100 grand, you have a 12.6% return. If you are trading with us and you have a 20% return on 100 grand, you have a 14.64% return, a tax savings of over $2,000. So you can boost your returns simply because you're trading in a preferable asset class or space, and that is a tax advantaged asset class. No more itemizing. And here's this question. Again, you've seen this slide, but I'll review it again. Why are we doing just stock market indexes? Well, as you saw, they're always less volatile. We have that secret Dragonfly strategy. It's not available with stock options, and I'll show you in just a second. And then we're just looking at one or two markets, not thousands of stocks. Here's Tesla. You can't really trade that successfully by selling non-directional strategies. Or Tilray, another big one. I mean, look at those, down to 10, up to 60, down to 20. AMC, same kind of story. So really, why the E-mini or the ES 500 options? They're liquid, efficient, cost-effective, and that mini is a huge market. It's two and a half times larger than all ETFs around the world. So if you weren't aware of that, this is the place you want to be. Average daily dollar volume compared to the SPY, over almost 10 times greater when you trade the ES. So folks, this is the market you want to be trading in. 5 additional reasons: large volume, liquidity, access. Average daily volume here, January, 1.549 million. Superior execution. So that's what that means. You have all that volume, you have superior execution, a cost savings of $4 to $15 per contract compared to SPX options. So you're looking at basically a tight bid-offer spread. Largest market share, you have densely packed strikes, 100 annual expirations, granularity and coverage. Now, what does that mean? Here's an example. Here are some dragonflies or condors, for example, and these are the short strikes here, represented by, these are the calls here and the puts on a dragonfly. Now, as the algorithm and Theta Trader is seeking trades each day, if the strike prices aren't available, it can't build the trade for you. That's what you mean by granularity. So you can't do this in stocks. It's just the granularity is not there. If you're looking at deltas of, whatever, 7 or 8 or 9 on particular options on a particular stock, it's just not going to be there. There's just the volume and the depth liquidity is not there, folks. So once again, track 1 or 2 markets, not thousands. Efficient margin compared to stocks. Clear cost structure. So I want to talk about this for 1 second. There are no hidden costs with these options. These are not securities. Everything trades at the CME Group on their electronic exchange called Globex, and that means all orders, large or small, get equal treatment. So there's no payment for order flow. So Robinhood, you all hear about that in the news. Everyone's got free commissions. That's not free, folks, and I'm going to beat up on them just a little bit, so bear with me. Robinhood and the free trading model, quotes free. It is not free. Payment for order flow is the fleecing of the retail investor. Recent article this month. You aren't getting the best execution, and you probably trade more actively, increasing your risk. So there's no such thing as zero commissions. This is a great piece of Market Watch. Robinhood's fined $65 million. People are trying to save a penny, and meanwhile, they're losing a nickel. So if you're not paying for something, you are going to pay for it in a way you can't see it. I think that's a very clever way to put it. SEC found Robinhood provided inferior trade prices, costing customers $34 million. I bet the number is much, much higher than that. Fidelity gets better execution than Robinhood because they don't take rebates. Interesting. Nothing of value is truly ever free. So my point is, we can all trade stocks, but let's just not convince ourselves that it's free. It's not free. So that leads us to the question, what are the commissions with Theta Trader? They are 5.25 round turn all in. Now, here's a piece I took off a big box brokerage firm. And remember, these are futures options. So here's their quote, 2.25. And you think, oh, gee, that's a lot less than you. It's not. That's per side. And it doesn't include exchange and clearing fees. You add it all up, and it's more than what we charge. Yeah, there are some places you can find for less, and some are even more than that. But our rates are very competitive, and quite frankly, we're not competing in the same space as them, those guys. Anyway, we offer a totally different level of service. So, a reminder too, people ask what's the performance of Theta Trader. Well, everyone is self-directed. So you receive trades and you make your own decisions as to what to buy, what to sell, when to do it, and so on and so forth. But I want to point out all the performance is net of all trading cost. I should have said that in the presentation demo, but everything, all the percentages, all the dollar figures are always net of all the commission cost. Okay, that's all calculated into every trade. Now, what size of account? Well, if you want to do multiple option spreads in Theta Trader, we suggest 50 to 100,000. At the same time, people will say, well, what's the minimum? So if we had to say a minimum, I'd say 25,000. If you want a free elite membership, you have an account with 50,000 or more, we will refund that membership fee. And now here's something else too. People say, well, I love everything, but I just want to trade by myself. I don't need to talk to anyone and I don't need a coach. Well, we call that the pro membership. If you're self-reliant, you can use Theta Trader, but you do not get the coaching. So that's the link here, cf.altivest.com/pro TT. So that's for the Theta Trader software users, self-reliant, no coaching, and that's the free membership. And then the trading account types, of course, you can do an IRA, individual, joint, corporate, LLC, trust, you name it. With an IRA, ask us for the details. There are some requirements for either and or experience or financial requirements. And then why alternatives? Well, they may improve diversification and lower portfolio risk. So alternatives have a low correlation to traditional investments. This is a cartoon I thought was kind of fun. Running of the bulls. This guy's just chasing the bull market here. Here's total market cap to GDP. When we talk about bull market, valuations at record highs, and it just looks like it wants to keep going higher. This is sort of what Warren Buffett looks at to determine if he thinks markets are overvalued or not. But at the moment, looks like it's going to keep getting more and more overvalued. You have record spending fueling stock market prices. They're just going to keep printing money, folks. That's what it seems like until of course the music stops, right? No one really knows when that is. Record stimulus is fueling stock market gains. Investors pouring record amounts as the stimulus checks arrive. But look at this here. Here's the S&P 500. And really it's dominated by, what is it, 6? I think it's actually 7, but there's 6 different companies. So that's really the market. Just really a handful of companies. But meanwhile, they're going to just keep it coming here, right? Keep the easy money flowing, blowing the bubbles. But that's why we like alternatives. That's what we do. We're in the alternative space. Allocation to alternative investments makes a lot of sense. They're not correlated to a benchmark index. So if you have a portfolio of all stocks or 60-40 stocks, and there's a little slice of that portfolio in alternatives, we'd like to be a piece of that with you. So there you have it, folks. Your Theta Trader Elite. You get the Theta Trader software with all the trade alerts, the automation, and your personal coaching. There's the link. Remember to 30-day guarantee, and then the pro membership. It's everything that Theta Trader offers without the personal coach. So that's available too. Just to kind of summarize the difference between the two, just to clarify, the Elite gives you everything, including the personal coach. for the one-time payment of $597. And then of course the Pro membership is everything except the personal coaching. And there we have it on the last slide of the presentation, just to sort of give you an idea. That does expire, by the way, on Monday, this $597 offer. And at the end of the webinar, after we're done, you will receive a survey to complete if you wouldn't mind. It'd take you probably, I don't know, probably 30 seconds, quite frankly. But it's always great to get feedback on these presentations. It helps inform us as we move forward as to, how to kind of strike the right chord and really provide the value and the information to our audience. All right, well, let's see here if there are any questions I didn't get to. No, it looks like, we talked about minimum account. We talked about, yes, IRAs. We can do that. Do ask us for details on that. Unfortunately, we cannot work with Canadians unless you have a legal residence in the US. So that's a good question. Yes, the quantities can all be really anything you want as long as you have the available capital in your account. And yes, you would have to have a trading account with us, AltaVest. We are the brokerage firm, and this is the technology that we developed for our client base. So if you sign up, you become a member, whether it's the Elite or the Pro, then soon after you will receive a link as to how to proceed with opening your trading account. You'll receive an electronic account application. Pretty standard stuff. We can do individual or joint or trust, you name it. And let's see here, any other questions of interest? Well, yeah, someone asked about different trades. I think what you're saying is if you have a short option strategy and the next day you look at your account and there's some more trades available with the same strikes, you wouldn't want to place the same trades on top of each other. You wouldn't want that concentration risk. So you're not always going to be trading. This is kind of sometimes like molasses, or you're watching paint dry. We tend to be boring. You might even trade. You might even not even have a new trade in a week. It just depends. Other times it gets more active, and you might get more alerts that might be more directional in nature or more short-term in nature. If we think there's, a volatility discount or something like that, or whatever it might be. So other than that, a lot of people like to use the platform completely on their own to augment what they're doing with their other investments, or some people rely fully on the alerts, and that's okay. It just depends on you. Someone's asking about the condor and the dragon. Excuse me here, I have a frog in my throat. Yeah, typically the dragonfly will be closed. Well, not typically, but sometimes you can close a dragonfly sooner than a condor. It tends to mature sometimes more quickly than a condor. And once again, it's because you buy that extra put and call, and that acts as a hedge. So we really, really love the dragonfly. Okay, let me see here. I'm getting some more questions, folks. Oh, yes, and we will send a replay. Absolutely. And someone's asking about profitability of the dragonfly compared to the condor. Yeah, you can typically turn over a dragonfly more quickly than a condor, but of course the condor has a higher targeted return on cash because you're spending less money on that trade, and essentially you're receiving more premium typically. So it's kind of I guess you could say, a bit of a mixed. Um, at sometimes you'll make more money on a condor, but you'll have to hold on to the trade longer to do so. Yeah, sorry about that. I didn't mention the replay. All right. Well, very good. Thanks everyone for joining me and putting up with the little bit of the frog in my throat. And other than that, there is a replay shortly. Probably in the next few hours, we'll be able to get that processed and out. And the discount is made it through Monday night, just because of the Easter weekend and whatnot. Just give people a little more time. And again, there's a 30-day guarantee on that as well. So really, you don't have anything to lose by getting involved. And if you decide later it's not for you, that's okay. Well, very good. Thanks for joining us, and we'll wrap it up. Have a great week, rest of the week. Have a great Easter weekend, everyone. Bye-bye.